Hey traders, Raghee here, and in this recap video we are going to go over the current trade in the Dow. And the reason I want to emphasize this is about trade management. And I think one of the things that's always so dangerous about being a trader is just out looking for that next entry, right? That's the thing we're always looking for, because the next entry gives us our next profit, and then we just end up being these entry machines. And yet profit management, trade management, is where we realize the profit from all these well-placed entries. And yet that's probably one of the least sexy parts of trading. Like, you know, a lot of people don't look at the mundane day-to-day management of taking a winning trade and just making sure you're getting all that you can out of it. And that's what I'm going to talk about here. It's not difficult. And I'm going to use a current trade example in the Dow. Now, this was a really recent trade example. This is something that we took just on the 25th, and it was a 23,205,210 buy. By the way, this same exact trade I have re-entered on the spreadsheet within the members area. We're looking to refire that same trade that we took on the 480-minute time frame. So what do I have? I have a really nice daily uptrend that just isn't catching up to any level. Darvis, 13 EMA, 21 EMA or otherwise, just not catching up to a level that I can do anything about. And that's a problem, because if I've got a great trend, I want to buy those pullbacks. The last time we did it, worked out very nicely, was able to take it up to and through 23,295 and then 23,345. And then we're just looking to trail the stop and see how high is high. So one of the things that I'll do when I'm managing a winner, and this is the very first thing we do, and this is super important, is we go to a break even. As soon as we hit that first profit target, we move the stop. And this is what I call a risk-based stop, right? The risk-based stop would represent a loss of your capital, of our capital, right? My capital, your capital, we lose money. It's our money, right? So we move the risk-based stop to a break even, meaning we're only risking what I endearingly call house money. We're just risking unrealized profits. Now, it's not exact, right? A break even might represent a very small, talking a handful of points, a handful of pips, just a small amount of our capital. But at that point, having realized a profit, this is where the trade is a winner, right? We realize a profit. Even if the market were to trade back down to our break even stop, it should represent only primarily a loss of unrealized profits. So that's the first thing we do. Now, as the trade continues, in this case, we get through maybe a second profit target, we continue onward. Once we clear, in this case, because we're talking about a longer term time frame, the 480, once we clear the daily price movement range, and I'm going to show you what that is right now. Once we clear the DPMR, we can consider a trailing. Now, a break-even and a trailing are not the same thing. A trailing typically insinuates we are locking in some unrealized, not all, but some unrealized profit. Okay, so let me show you the daily price movement range here on the, there we go, here on the Dow and the YM. So this is a tool that we use very often in the chat room. It really is just one of the most amazing tools that we have, and it gives us price movement ranges based upon historical tendencies, 68% probability. And with that, I know that today I would have to look at about 110 to 135 points of expected price movement range. Tomorrow it's higher. Tomorrow it's about 125 to about 150, 155. So the question then becomes, the most obvious one is, from my entry to current price, or really, I'm sorry, from current price, I'll start thinking about how to trail. But have I locked in a profit equal to the daily price movement range? That's simple arithmetic, right? I take the 23,205 that I entered at, and I take my profit target, which was at 23,345, and I take 23,205, and I have what? Super easy arithmetic. It's 140 points I've realized. Okay. Now, I don't want to let this winner turn into a loser, so I have a couple choices. I can go to something as aggressive as maybe an hourly price movement range, and perhaps there's a trend intraday that'll let me back off by 1 hourly price movement range. I actually don't have that. So I go to the next choice, the expected price movement range. Unless you're going to go to a very aggressive trade management, I would back off by the expected price movement range, which would say right now, it still makes sense to keep the break-even stop. How do I know that? I look at this number right here. Right down here, 23,197. It's pretty much still a break-even for our current trade. And that's okay. At some point, when we punch up to a higher high and I have a little bit more of a cushion, I can talk about backing off and maybe locking in some unrealized profit. What I'm showing you here, it might be a little boring, it's some number crunching, etc. But when people ask me, Rog, how do you take, for example, the Euro US for 1,200 pips? You know, how do you take, for example, we still have an open S&P trade, gang. Here we are up at 25.68. We're still in from 24.85. Okay, how do you take an S&P trade for 100 points? You know, coming up at 100 points. This is how we do it. A lot of people are not bad trend followers because they lack the patience. They lack the information and they lack the timing. And that's what I'm showing you here. The sequence that I use in order to really maximize the most out of trends. Hope this was helpful. I'll see you in the next update.